and you have the United States now is exporting 5 million barrels of oil a day, up from 3.5 million. That doesn't include what's coming out of Venezuela, what's coming out of Guyana, what's coming out of Brazil, what's coming out of Argentina, what's coming out of Kazakhstan, what's coming out of the Nigeria. And so between now and when I made this statement 2 months ago, between November and February of next year, we'll completely replace the energy that's flowing out of the Strait of Hormuz.
That we are at the repricing of life again. This is the new base layer. Like 2018, 19, before COVID, that was a certain layer that we'd gotten up to as just the base for life. Post-COVID, we're at a new base layer where everything had gone up X percentage and you just got used to it. And that was the new base layer for everything that you bought. This is the next level up, to strip away some more generational wealth. The repricing of life is here once more. And I can't see it dropping back down even to the COVID pricing after all this Hormuz thing is over. They've already known that people will pay more for it. They're never going to drop the prices. Like how much the prices come down after COVID, they didn't really. Good afternoon, everyone. We have plunged into a changing world. Last time Bob and I talked, we saw this around the corner and we are in the midst of it right now. So with conflict, what's going to happen post-conflict? That's a big discussion to be had in terms of commodities, what's going to happen with food, gold, oil, silver, the cryptocurrencies, and how does this reflect? And, can we find a mirror of something in the 1970s? Of what has happened so we can forecast out into the future? Because I'm always saying that the best crystal ball for the future is a history book, looking back in the past. It's not going to be exact, but there could be a lot of things that match and is a good indicator of moving to the future. So Bob, appreciate you joining me, and it's going to be a good conversation for those of you, get those pencils ready to hit on paper, because we're going to throw some ideas down here on how to position yourself for this next through the end of 26 and into 27. So Bob, floor is yours.
The really interesting developments with the war is that the answer coming out of it is higher oil prices forever. Okay, and although prices are elevated from where they were pre-war, we've never hit the high we hit on the first week of the war. Okay, I think we hit $121 a barrel, and now we're stuck at $100 a barrel. And if you look at the futures curve for next year, they're talking $60, $65 a barrel oil. So we're in massive backwardation right now, which is kind of holding the prices up short term. But, what that's telling me, Dave, is that everybody's looking at the commodities and energy, and, we're going to have hyperinflation or stagflation. Is that my contrarian view is that going into next year, we may actually have a whiff of deflation. And I'll explain that to you in a little bit. So with energy right now, as long as this war's been batting back and forth, and my, 80% of my family's portfolio and what we normally trade is energy. So ExxonMobil, I have Oxy. We just did a trade on rig. We've been in and out of Schlumberger, in and out of KOS. So I've been taking those trades, but my finger is on the exit, because what's happening in the energy markets is that the Strait of Hormuz, is 20% of the world's energy flows through that, but that's a short-term problem. Saudi Arabia just moved 2/3 of their energy production to the west. UAE moved 30% of their production to the south, through their pipeline there. Iraq is building out a pipeline that's going to go through Turkey. Okay. And you have the United States now is exporting 5 million barrels of oil a day, up from 3.5 million. That doesn't include what's coming out of Venezuela, what's coming out of Guyana, what's coming out of Brazil, what's coming out of Argentina, what's coming out of Kazakhstan, what's coming out of the Nigeria. And so between now and when I made this statement 2 months ago, between November and February of next year, we'll completely replace the energy that's flowing out of the Strait of Hormuz. Okay, so it takes away the biggest bargaining chip that Iran has, and that's why Trump's playing rope-a-dope with these guys. Okay, they blocked the strait for them too. So the game of chicken is who's gonna outlast who. Well, the United States will outlast Trump, and with what's happening with the midterms is he may not even lose in the midterms this way because of the structure of the politics this year. So I bring that up to tell you that everybody might be looking at the wrong boogeyman coming in this. And now if you look at the markets, even today, rare earths are down, fertilizer prices are down. You have gold down, silver down, Bitcoin down, market down, semis down, is that the market's been priced for perfection. And so, one of the things that people really, really need to think about going into next year is that, you need to get a hedge on. And so our analog may not be the 70s, Dave. The analog might be the year 2000, okay? And or even, even the 1920s, we had a commodity boom that led up to the 1929 crash. By every metric out there, we are overvalued to the, well, it's never been this out of balance before. And we're at a point now where, I manage through our AI, I just actually changed everything. AI enabled all our systems. It's just unbelievable. What a breath of fresh air. I'll show you in a second. And I have a dashboard that I can manage every sector, and it tells me, how overvalued they are, where we should be looking at putting our trades on. And in fact, you have a second, I can show you real quick too.
Yeah, I'd be really interested in gold and silver myself, because I see, through history, this has been a safe haven moving forward for a lot of people to store value and like ride out this storminess, for a better term. But I'd like to see what your charts and what AI is predicting, or how it's, analog for the past, and, different log scale, take a look at where we are on curves and whatnot.
So if you look here at the bottom of my bottom pane, and you make a separate pane. So I'm monitoring the top 18 sectors in the stock market. Okay. And what it looks for is that you want to be in the sectors where, let me go to the daily here on this. You want to be in the sectors that are showing the 5-day and the 10-day green. Okay. And those, when you're trading, and you want to avoid being in the market where you avoid the 5, 10, and 20 is red. Right now, the 5-day has been red, 10 and 20 are up, meaning you should be trimming your positions in these sectors. Sector is dynamic. Every trade is changing this. And so our AI is just managing this dashboard for me. And so like today, if I'm looking for trades, I'm looking for trades in the software space, consumer staple space. I'm trimming in the semi space. I'm looking for trades in the energy space, healthcare, and then everywhere else I'm not interested. So knowing that, then if you go into the system here, you really only want to take trades in those sectors. And so here's the AI monitoring trades for me. Okay. So it's looking and it's giving me signals. Here's a buy signal, made a 2% trade. These red dots are telling me that when prices are getting overvalued, you can sell calls against it, or you can sell or trim a position in it. Like I said, I have ExxonMobil as a core position. So you can go down here. I click on ExxonMobil. I'm looking at it right now. It's a live trade. It's a profitable trade. The dashboard's telling me it's going to, if it moves up a certain amount, it'll move the stop up for me and tell me when to get out of the trade. It's also telling me at this point now that with the diamond is that I should be, if I have a core position, I should be trimming some of my size out, so that I can take profit, right? You don't make money in a trade unless you can cash out on it. And you can see here ExxonMobil from the green buy area back in the 6th of May, it's gone from 143 to 162. One hell of a move here, and you would have caught that move. And this is helping you. Look, it's telling me to trim. It's telling me to reduce my heavy position on it. It's telling me I'm in an uptrend. Okay, it's telling me I have a long trade on right now, and from 154.67. All right, and now I'm trailing that trade at 147.48 and higher. And
So, Bob, let me ask you a question then. This is all additional new metrics to look at on what you had for your trading platform right now. This is all additionals that you
yeah,
added in.
this is all the stuff that I had behind the scenes that I would have to manage out for you. I now, because of Claude, we've had 6 weeks of sessions, and we were able to build out this dashboard. It was able to extract the data that I had behind the scenes out in front for our customers. I mean, it's amazing. And Dave, I decided not to charge additional for this particular dashboard. It's whatever service level you're on, you're going to get this. I think it's that profound. It'll change the way you trade. So, if you go to tradelikeagenius.com or,
Tradewith2030.com, everybody. Tradewith2030.com.
Just ask for this tool, and it'll be granted to you as long as you're a customer. I mean, it's amazing. It's a game changer. And the other thing's really cool about this is that you can go to a watch list, Dave, and you can manage the watch list. See, I'm managing it right now. So, in fact, in the next 14 minutes at 8:30, I'll get my first batch of any kind of buy signals I need to be concerned with, or any kind of trim signals I need to be aware of. And so the AI does everything for you. So you just have to just sit back and then evaluate those trades from what comes up on the signal and pick your best trade that you want to have. As long as you have cash available to you, you want to put a trade on, it'll give you the best setups for the watch list that you're following. And then all I do then is I take it and say, okay, is that in the software space? Is it in the energy space? Is it in the consumer staple space? If it is, then I'll put some money to work on it. It's really, really, really cool. So I just want to share that with you guys. And like I said, it's dynamic. It works on any time frame. I mean, here's a 1 minute, trade, 15 minute. It doesn't matter. In fact, you're trading this on the 15 minute, you would have got a 6% trade on it. So it all depends on how you want to trade. It's up to you. But if you notice here, it's basically telling me that this thing's getting a little spicy up here.
Yeah,
so it's
triple
time to
top.
trim.
You definitely want to get rid of that one.
Yeah, so you don't want to get rid of ExxonMobil, but you
definitely
you
can go short on that. When you see that triple top signal, I was like, wow, that's going to roll over there potentially.
So I did. So I sold calls on it this morning at the 170s, because this is a core position for me, I'll never sell it, but I'll always sell calls against it when it gets spicy like it is right now. So this is just a very visual tool. So guys, just come check us out. I mean, what we charge for the service is nothing compared to get out. I mean, this thing alone, if you built this on your own, it would have cost you $40,000 or $50,000 to build it. Okay, so my 30 years of experience and now with basically an AI programming buddy, this is 1,000 lines of code, Dave. Okay, and it just expresses information to you that's actionable. So I thought I'd share that with you guys. I'm going to stop sharing now.
Well, no, I had a question to follow up on that. Like, what's your win-loss ratio increased because of this before with software you're running higher than normal? So what has this done for that win-loss ratio comparatively on trade?
Yeah, it's too new, but we think it's going to bump it up a couple percentage points because we're already pretty good. What it does though for the customer is that I can't manage everything, and so now I'm going to give you the tools to be able to find trades that I may not be able to find for you, just because I'm limited by me. So you're going to be able to put your own watch list together. You're gonna be able to, look at your own trades that you want to trade. I like to trade on a 2 hour. I got customers like to trade on the 15 minute. So I'm giving our customers more tools to be able to be more effective and independent traders. Rather than just waiting for I'm getting a signal from Bob. Does that make sense?
Yeah, it does. And then on the 4 hour trade too, you can just wait for the big, the biggest hanging fruit, and you can see those rollovers pretty easy. One of those longer time frames that it's definitely going to move out that way. So
Yeah, and what we've noticed, if you get buy signals at the end of the day, institutions are buying into tomorrow, so they usually have carryover effect. So anyway, I thought I'd share that with you guys. It's really cool. I mean, check us out. I mean, what you would pay 10 times as if you just went and tried to hunt this kind of stuff out on the internet. And we're high touch too. A lot of those services just have signals. You can't get a hold of anybody. I'm in the room every day. Phil's in the room every day.
yeah,
So
the chat rooms are pretty full of a lot of information, people going back and forth, and you can just sit there and listen in the background while you're doing something else, because it's not a continuous yak, 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 yak. It's just when signals come in or some sort of information that seems pertinent, seems like Phil pop up for a minute, chat it up, or you will for a minute, give a signal, and then back to silence again so you can work through the day. So just kind of keep it
yeah,
as sort of a, I would imagine something more in the 1930s when you're listening to live radio and some urgent signal comes through and you're like, listen to this. And then you're like, okay. And then you can go back to
yeah,
work
and
again.
look, it's interactive too. If you join the VIP room, like you and I are talking, I talk to customers, talk to me all day long, and I got some pretty high end customers in there. I mean, some people have done some really interesting things. I mean, I have people that are probably 5 times better traders than I am in the room. I mean, that's how smart some of these people are. And they're in the room not just getting trade signals, they're getting context. I think my true strength is my ability to see the future, and my background in strategic planning, and I think I'm pretty good at conceptualizing information as to where the hockey puck's going. So I think a lot of people appreciate that. And there's other people that are in the industry. When you're in there, you're talking ag, and I have other people that are in AI right now, in the AI industry, explaining to us what it is and what it is not. I have farmers in there, that are giving me ground, on the ground reports on what's going on in food and greenhouse technology. And we have engineers in there, we have artists in there. So you get a really, really interesting mix of people, a lot of business owners, and so I would say half the people are retired, half are working. And so it's really a good fun group of people. We're all like-minded. We kind of see the world the same way. So you don't get a lot of the political garbage that other people get. So come check us out. I really would appreciate it. I think you'd really, really like it. Dave and I have been doing this together. God, we're coming up on 13 years, Dave. Isn't that amazing?
Where's the puck going, Bob? Yeah, it's all about making money too, because really, if you're going to transition through this period of time, and we're coming into an upheaval period, you're going to need some resources, and you can't sugarcoat it and be like, oh, I don't believe in using this or making money with that because it just does. You're feeding into the system. Yeah, you got to come back down to reality.
You got B&G Foods like making 52-week lows, but you got cocoa, the water company making 52-week highs. I mean, it's the most bizarre thing. You have oil going straight up, you have silver going down, silver goes up, oil goes down. So there's a lot of cross currents right now because they're trying to outguess the Trumpster, in terms of where he's going with this. And then now, because I did that total curve off the highway here, I think Trump went to China to kind of say, hey, this is the way it's going to need to be. China's their reserves on oil are going to start to diminish. They can only get so much from Russia, and you have a situation now where you'll get a pause. I think there'll be a breath of fresh air, and then deflation is going to roll in. China is reporting horrible prices. Samsung just left China completely. They can't make a profit in China because of the price wars that the manufacturers there are having with each other. And
Well, that's because they lost their export markets, and that was the whole thing. Is domestic suppliers try to jump in on the export market, and it just didn't. Again, you're talking like 0.5% margin, and they were trying to wiggle down to 1/3% margin, 0.2% of margin to try to stay alive, and they were cutting each other's throats. It's still like that. You called that one right there correctly.
Yeah, and what's happening now is that even though they're trying to block China with tariffs and everything, they still set the price. And so, you can't get too crazy with your pricing. Look, Look, beef prices are starting to get out of hand. So what does Trump do? I'll drop the tariff on beef. So tariffs work both ways. So all of a sudden we get a flood of beef coming in from Australia and Brazil and Argentina. It'll affect it. It'll affect the domestic demand. The same thing. They could just do these levers with China. Whenever Trump or any other president wants to get a dose of deflation in there, they could just let a flood of imports come in, and keep the domestic, suppliers on their toes. But, with AI coming in, and I hate the word AI. There's no such thing as artificial intelligence. This is, everybody does that. No intelligence is artificial. It's created by a human. Okay. But what is done here is it optimizes everything. Just like that code, there's no way in God's green earth I could ever write 1,000 lines of code, even if I knew Pine script perfectly, okay? Because that AI is just a machine that can do it. And it literally wrote it for me, the last version of it, when we did a refresh, 7 minutes for 7,000 lines of code. 3 errors, and they were syntax errors, okay, that were solved by me. So that's what's happening. So you're getting basically another flattening of the organization, okay, which is ripping out, and that flattening has a lot of buying power. As that gets flattened down, people just don't have the money to do things, and so you're starting to see that squeeze coming in. If you go to the grocery store, 10 years ago they had all these high-end products in there, right? They don't have those anymore because people aren't buying them. So you're going to start seeing the shelf changes. The grocery stores here in California are shrinking their footprints by 30%. Okay, because the commercial real estate is expensive. Grocery store pays $80,000 a month for a footprint in Southern California. So if those guys could shrink their footprint by 30%, that's meaningful margin for them, and they lose no sales from it. They're stacking from 3 shelves to 4, okay, and they're ripping out extended lines, and you can see it. You can see Heinz is getting crushed, and B&G Foods is getting crushed because they're just tearing the margins right out of everything, and you're going to see that across the board, and where you just aren't going to need the people to do things. And the other thing that AI is going to do that's going to be on the plus side is that there's going to be people out there like me, 30 years younger than me, that's hungry, that now I have a whole suite. For less than $200 or $300 a month, you can have an incredible office suite for you that does everything. It's just plugged and play. You talk to it overnight, the next day you're in business, and it'll manage the phones for you. Okay, it'll manage your customer service inquiries. It'll route things for you. It'll route it to another agent, to another company to handle things for you on an outsourced basis. I mean, it's just amazing. One country I would not want to be at this point, Dave, is India. Okay, AI is the India killer. So all the total outsourcing that's going to Indian firms right now is going to be done domestically in these data centers. I mean, absolutely scary, frightening. Okay.
Yeah. Another scary, frightening for India is they've run out of polypropylene bags, or the woven PP bags, of grain sacks for a better term. So they're having massive rice distribution problems there. The rice is there, but they just don't have the proper bags to put it in to get it in the supermarket. So they're taking it by trucks again out to rural towns, and they got crews of people. One person weighs it on the scale, one person takes your money, and there's guards along with in the trucks, because they're carrying a lot of cash and they're carrying the food, and they're going to some more remote locations because you just can't buy it in the supermarkets anymore. They're having to rework an entire distribution chain just because the actual packaging is not there of the plastics, and that's a major disruption. So you can already see that huge economy already, showing some big problems, and that's in India right there. I'm telling you, India is the flashpoint of the disastrous large economies that are showing how fragile they can actually be.
And we've said this before in this show, is that unless you control your food and energy destinies, you're a vassal state. And China cannot, India cannot. Okay, Russia can, Ukraine can, United States can, Canada can, Argentina can, Brazil can, Australia can, New Zealand, just food. And so, you have an environment here. Israel now can. So you have an environment now where that's who's going to be the one that's going to be surviving down there. Now you add one more component to this is really what I would call the strategic metals groups, and I think Russia sits pretty strongly in that area, but and I'm not talking rare earths. I'm talking about the heavy metals like platinum, palladium, cobalt, and that's why the United States cut a strong deal with Democratic Republic of the Congo, and then also now we're finding those resources here in the United States too. So that's why where you need to worry about is countries that can't source us in a collapsing trade environment. So India is going to have to really, really pivot hard, and here's the thing with I consider India a fairly corrupt country. Same with China, same with Russia, is that they really struggle, with pivoting because people who already own things don't want to give up things, and they don't have that Schumpeter's, destruction mechanism built in as a culture, so they're going to struggle with this because people will hold on to their legacy profits to the bitter end instead of pivoting.
Well, I saw another thing in India that's really interesting is, there's a fair few festivals coming up to this time of the year, and generally people buy gold. They shifted to silver, which is an outlier anyway, but now the government's trying to convince them to not buy gold and silver, but to put their money into the traditional markets. Go into the stock market, go into the Mumbai exchange, you're going to make more money there. If you guys are going to just hold gold to try to make money, that's a waste of your money. You need to put it in the markets. And they're this massive push to get people away from buying gold and silver, and then they raised the tariffs to 20% on gold and silver. It used to be 6%, just to stop people from buying it. And they're really trying to force everybody to use that money into the markets because they don't want them saving it in something they hold. And you can already see, like, this is a blueprint of how most governments are going to operate. I mean, India is just a basket case of problems right now. And you were very politically correct. And they're very corrupt.
Well, I mean, it is what it is. I mean, look, the United States isn't any shining beacon on the hill.
Corruption that hides behind the shining.
We just taking corruption to an art form here. It's theirs is more raw, but we still have the culture of innovation and look, the AI thing is a classic example. When coffee came out, every store had a coffee shop, right? When big box stores came out, every corner had a Home Depot or a Lowe's. So we're really good at attacking new markets and then worry about pooper scooper later. And that's where we are with AI. And bringing it up to the semiconductors, I think semis have topped here. Okay, you're at a point now where I just read articles that the cost of employing AI agents and software tools is now meeting the price of the person you're replacing. Okay, so now it's a decision point for a company whether or not do I replace this person with an AI agent or workflow, or do I just optimize the employee and stay with what I'm doing? And I think you're going to find that a lot of people are going to do more wait and see. It's not mature enough yet. And maybe I'll just optimize my employee, or I'll restructure a little bit. And all these AI, semiconductor, everything is priced for perfection right now. They have to continue to grow. The AI space, the semi space, it's bigger than almost every country in the world's GDP except for like the top 5. Well, where are you going to grow into? You're already at max speculation level. And when that thing rolls over, which I think it topped 2 weeks ago or last week, is that we're going to get a false second top, which will be lower. And then we're looking at, a move that's going to go down 30 or 40% from the highs, maybe even more, just because of the valuation part of it is out of whack. So it doesn't mean that, chips aren't going to keep selling and AI is not going to keep getting built out. Well, same with the internet, right? We still had the year 2000 to 2002 market crash, right? But the internet kept on trucking, and that's what's going to happen here. Semis are going to take a big hit, So if I were you, and if it was my money, which it is my money, is that I've been already dabbling in taking some short shots on some of the semis, and once you get that second high that doesn't beat the first high, then you can get more aggressively short because the institutions will, and then you're going to see that market roll over, and it's going to bring the whole market down with it because it's the only space that's been making money. And we have AI tools now that are telling us that the percentage over the 200-day moving average is basically the high probability of a market sell-off. So that's where we are right now. So I think I covered the gamut. I think when oil starts to go down, gold and silver will come back up because really gold and silver is a barometer on the 10-year. The 10-year has been rising. When the 10-year rate rises, oil goes up, gold and silver go down. Bitcoin seems.
Yeah, the NASDAQ being so correlated with crypto, I mean, you're talking about a rollover. So we looking at a full market, I wouldn't say depression, but decline back again. Because Phil was calling Bitcoin he was pretty sure it was going to be rolling sub 50 there at the end of this before we really touched the bottom on it. And all these countries, the one thing that's when you're talking about the bond market here, so many countries are dumping their bonds. They need operating capital. So if you can pick up something cheaper, they're willing to sell it at a discount on that secondary market. Hey, I'll sell it for a point off or something, and then somebody comes in. Why would you buy the debt at a higher price? Of course, like you got all these sellers that are trying to get rid of their bonds at a lower discount price, and then you got to offer it at a higher, better rate to get more interest in that. And we're just getting into this doom loop here. So
yeah.
Just talking about that 10-year, I mean, I've been following this a little more, getting some actual good education on it. But yeah, this movement of money is, I'm just wondering when that disconnect is going to come, because I can't believe that crypto is still so correlated with the NASDAQ, with the Clarity Act coming in and going to be passage of that very soon, stablecoin issuance and all these coming. So at some point, there has to be the rift where traditional, what it used to be as metrics to follow, are going to segregate and decouple from themselves.
Yeah, and look, I mean, Bitcoin is still too new for people to know really where it sits because it's still pretty highly speculative. But it seems to me that it's acting like a monetary metal. Okay, so gold and silver and Bitcoin, I think, will generally move together, and they don't like a rising 10-year yield. Okay, oil loves a rising 10-year yield, but they don't. So I think once we start seeing, the 10-year start to roll down again, then I think we're going to see, we'll see gold, silver, and Bitcoin maintain or gain a bit again. I'm kind of playing both sides of it. In my trading account, I'm heavy in energy. In my IRAs, I'm heavy in gold and silver, and I even have BITK. So I'm doing the 0 DTE ETF on that, and then I also are dabbling in Misty and those to get yield, but not a big scale. My daughter's pretty heavy trading the pair trades, so that's the other thing people don't realize. You can go long and short MicroStrategy at the same time, and just pick up the yield between the two using the YieldMax products, Misty and Winter, and you can draw it net 30% a year, and the principals are just fighting each other, and you're just picking up the weekly dividend. It's amazing. I've been doing it now for my daughter for over 2 years, and last year was a 40-some% gain. This year it's around a 30% gain, because Bitcoin suffered a little bit. But you can pair trade Bitcoin, MicroStrategy, Coinbase, Tesla, and NVIDIA. And so you can just pair these up on whatever ratio you want, and then they pay weekly dividends out. Pretty amazing.
Encourage people to check it out, because what you had already as an algorithm running there to give you those signals to show you when the opportunities were there, when all those metrics that you'd smash together in your own program were showing you, hey, there's this roll, and it was all visual too. I mean, it was already top notch anyway, but to add in this whole other layer of AI, you're looking at something special, unique, and magnificent here. Truly, that an individual representation, you as just somebody coming in, can understand it that's the biggest win, is it's all visual and you can actually see when it tops, bottoms, middle, whatever you're going to go at. And those rollover points, that was excellent. And Job was happy with what it was before, but now adding the AI.
Yeah, and you still have those, by the way. I'm not taking those away. So the tools that you have, you just build a template with those two tools, and then just add these two tools on top of it. So people like, I want to give people a choice what they like to trade and how they like to trade, because those tools aren't bad either. It's just that this has more of a dashboard feel to it. That's all.
Yeah, Tradle2030.com. You got to come over and check it out. Bob's got some amazing opportunities for all of us to take a look at. And remember, you're going to need these resources moving through this. Like in the very beginning of our talk, you were talking about a new base of oil at 100 and then price coming down. But I am at the clean thought here that we are at the repricing of life again. This is the new base layer. Like 2018, 19, before COVID, that was a certain layer that we'd gotten up to as just the base for life. Post-COVID, we're at a new base layer where everything had gone up X percentage and you just got used to it. And that was the new base layer for everything that you bought. This is the next level up, to strip away some more generational wealth. Well, you need to grab that generational wealth back from somewhere else out of the ether and pull it back into your hands, because the repricing of life is here once more. And I can't see it continually, I just can't see it dropping back down even to the COVID pricing after all this Hormuz thing is over. They've already known that people will pay more for it. They're never going to drop the prices. Like how much the prices come down after COVID, they didn't really. You got priced in at a certain level that everybody was willing to pay. That was substantially higher than it was in 2019 pre-COVID. This is the same thing.
Consider this. Demographics are a powerful metric. So old people don't buy as much as young people. And you know who has the money today? Old people. So the money gets what's called, it becomes dead money, meaning it doesn't circulate. And so, when you're crossing over the 60-year-old barrier, until you leave the earth, is that, you're all about, returning income. You're not really buying anything anymore. I don't know how many 60-year-old plus are buying homes right now, or putting furniture in and doing house formation stuff. And then the young person, and I'm on that end of the scale, and I have a 25-year-old daughter who's not buying any of that stuff because she's renting. Okay. And she probably never will buy unless she leaves California. And I just looked, no other state, other states are worse for affordability than California. So, you have a situation here where, basically they're living, I hate to use the word paycheck to paycheck, because they're not like they're going to starve. It's just that they're not viewing the world as, hey, I need to save up to do the next level. And you have to understand, inflation is a function of money supply and velocity. And money supply is a function of the mint printing it and somebody borrowing it. And so every month, barring anything else, you have money leaving the system through prepayments of loans, okay? And the government can only spend so much of that, okay? And so you're going to get a situation where deflation is just going to show up. And everybody poo-poos this until you start seeing it happens as fractures, Dave. You have another commercial real estate crisis, and then somebody comes in and buys up shopping centers at 30 cents on the dollar. They bring in new stores that are at lower rents, right? They're going to offer prices that are cheaper. New businesses are coming in. Like if you look at Africa didn't build out their telecommunication infrastructure with telephone lines, right? Their satellites with Starlink. And that's what you're going to start seeing. You're going to see whole industries start up with the latest and greatest. They're not going to have legacy healthcare systems. They're not going to have legacy this or legacy that. You're not going to have legacy food stores. The new stores are coming in are going to look way different. And so what people think is going to happen is not going to happen. We may have a short-term burst in stagflation, but you can't force people to spend money. That's what Obamacare was all about, by the way. It was forced spending of money because the young people weren't buying health insurance. So the government made everybody spend money, which was a tax that John Roberts said wasn't a tax. And so you have a situation where if the government's going to have to get in there, maybe that's where the digital coins come in. You use it or lose it, kind of a situation. But other than that, we're gonna go into deflation. China's going to lead the charge. I think India's going to be right behind them, and I think you're going to see everything just roll down, especially after the semis go. And I'm not being negative about it. Just as long as we know what's happening, you're going to be good. Look, my mother-in-law, parents and my grandparents, they went through the Great Depression just fine because they weren't leveraged, okay, and they had there was 25% unemployment, but 75% of the people still worked. So it depends. If you're leveraged, you're screwed. If you're not leveraged, you're okay. And those are the kind of things that people start needing to think about. Right now, the stock market's super leveraged. People have super amount of margin loans out there, and so everything rolls over. And so I'm just telling people, you may get a whiff of stagflation here, but you're going to get a stench of deflation coming in between now and the infamous 2030.
Oh, bring it on, the 2030. Yeah.
So, but that's how I'm governing it. And the other thing too, it's nice for you and I to pontificate, and for me to beat my chest and say how smart I am. I just let the market tell me what to trade, though, because I learned that lesson a long, long time ago. You can't be smarter than the market. The market will humble you in a heartbeat. So just let the trade signals do the work for you, and then you can sit back and you can solve world problems.
And that is the way the world unfolds in Bob's eyes. Thank you for joining me this month. Yeah, I want to see how these things are going to play out as well, because 2030 has been pointed to in a lot of different publications. It seems to be a very significant date in whatever it is for the transition from this world into this new, whatever we're evolving into is what you described. But 2030 does seem to be a significant year for that. So some marker in time, as much as 2012 was, or the year 1999 going into the year 2000. Like, there's different markers that, define a generation, something like this. So I appreciate your time, everyone. Tradewith2030.com. I'll leave that link in the description box below. Do leave your comments, because I read them also, and I like to see what you're thinking. So I have some more conversation to roll with Bob in the next month. So until next time, bye for now.